One of the most frustrating things in the world of tax as a taxpayer is when you find out that you didn't pay enough taxes, and so after everything is done, you have to now make additional payments. And a simple way of addressing that is to make estimated payments through the year so that you have already paid whatever is owed by the time that you file your taxes. So how do you do that? Well, the first step is to estimate what your income, particularly your taxable income, is going to be. And so if you take a look at your prior year return and then look at what's changed. So is the income more or less? Are the expenses going to be more or less? Are the deductions going to change? And determine what your estimated tax liability will be based on the changes from the prior year. And then from that point, it's really pretty simple. You can make estimated payments during the year anytime you want. If you're making payments to the IRS, then you can go to irs.gov and search estimated payments, or if you're making them to a state, just search that state's estimated payments as well, and you can find the online links to make those payments there. Typically, people will make 4 estimated payments during the year: April 15th, June 15th, September 15th, and then January 15th. Those are the 4 quarterly payments, if you will. And I know that they're not on an actual quarter basis. Ask the IRS why those dates are used. They're slightly off, but those are the dates that you would typically use as deadlines to make each of the quarter's payments. And if you make a payment through the year that includes at least 90% of your tax liability, the basic rule is that then there won't be penalties afterwards when you make that final payment at the time that you file your tax return. And you also want to pay attention to the adjustments that you potentially can make through the year, because by reducing your tax liability, you also reduce the need to make estimated payments. Now, just a word about those that have self-employment income and a W-2. If you have W-2 income, you're probably also having some taxes withheld from your W-2. So you'll want to take that into account when you're determining how much tax you'll actually owe. If you have any questions about it, feel free to contact us. We're always willing to help. But that's how you can approach your tax liability so that you don't have a big bill at the end of the year.